Okay, this is just a little preview of the statement of cash flows, which is pretty easy. It's one of the three financial statements that companies have to present, and it's one way to tell the company's doing okay. So that gives us a lot of information. A couple of things you should remember, it's got 4 sections, and today we're just going to talk about these 4 sections. I'm recording this, so if you forget it, or you can't find it in the book, or fall asleep, you can check it out later, okay? So it's cash only. We're just looking at the cash part of what's going on, okay? The way we analyze cash is by looking at everything else. It's kind of a funny way to do it. So we're looking at cash transactions. We always start out with a heading. So all financial statements should have a heading, okay? And for statement of cash flows, we should have the name of the company. It should say the statement of cash flows, and it should have some date on it, okay? Usually a period ending with some date. The first section is the operating cash flows. And the operating cash flows is probably what we'll spend the most time on. There's 2 different ways to approach it, and we'll talk about those the next couple of days. But the operating cash flows usually refer to the main business that's going on. So if you're selling donuts, this is going to talk about how much money you bring in and spend to make and sell the donuts. Okay? This information in this section is mostly from the income statement, but it could have some other information too. We'll talk about that. It usually only involves things like current assets and liabilities. And at the end of every section, particularly this one, we want to put down the net cash flows. So this is a really big number. The cash flows from the operating section is going to be a key number for your banker. It's going to tell whether you're going to get a loan. It'll probably be a good key to whether you're going to survive or not. So it's a really big, important number. The next section is the investing section, investing activities, and that involves 3 separate things. Okay? First is buying and selling fixed assets. If you buy them, it's going to use up your cash. If you sell them, that's going to generate cash. It also involves buying and selling investments. Investments could be bonds, it could be other companies, it could be stocks, okay? And it also involves loans that your company makes and the money people pay you on those loans. So those are the 3 things in the investing activities. And again, at the end of that, we should have net cash flows from investing. The next section is the financing section, and that involves just a few things. It involves stock sales and buybacks. So if your company sells stock, they're going to get cash. If they buy back their stock, they're going to use cash. It involves bank loans that your company makes or loans you take and payments back to the bank. It involves any bonds that you issue and the money you use to pay off those bonds. It also includes any dividends that you pay. Okay? And I should say the one last thing I didn't put up here is there at the bottom there's a reconciliation. So we're going to add the cash flows from operating, investing, and financing, add those 3 up, add that to our beginning cash balance, and that should equal our ending cash balance. And that's what we can use as a check. Okay?